Good afternoon and good evening to all. Myself Vaibhav. In today's session of Market Movers, we will be taking a look on the equity segment of the market, Dow Jones Industrial Average in particular. And in Friday's session, we had considered the possibility of Dow Jones continuing on the path down lower, but it has staged a turnaround, and now after registering significant gains in Friday's session itself, even in today's session, we are seeing that the futures of the Dow Jones Industrial Average are trading higher as the equity segment's mood has been upbeat in the Asian trading session, followed by the European trading session. If you consider the major equity indices in the euro area and even the UK, they are all trading higher. And this optimism is being fueled by the likelihood of earnings, the company results, which are due these days. And we even got the PepsiCo's earning today, and even most of the other major peers are going to release their quarterly earnings in coming days. And here, since the bar has been set pretty low, we are likely to see most of these earnings exceeding the expectations, and that has been one of the reasons why we are seeing these flows in the equities, and which is pushing the most of the equities higher. Of course, the easy monetary policy of various central banks is also at play, but now these fresh rounds of move on the upside is being fueled by this optimism regarding the earnings outlook. Moving on to the data front, if you consider the data docket for the day, we didn't really get many major releases in the Asian as well as European trading session. Even for the US trading session, it is kind of empty if we were to look over these US inflation expectations. And this is not a market moving release, but since we are not having any other release, we can indeed pay some attention to this survey data. And here we are expecting a dip in the inflation expectations of the people as the demand has fallen, and that is actually likely to put downward pressure on the prices of various goods and services, and that is going to reflect in the people's expectation as well. So for the month of June, the inflation expectations are likely to come down to 2.5% compared to the 3% reading we saw in the prior month of May. Now moving on to the technical outlook, we will cover the Dow Jones Industrial Average and the Euro USD. let's sorry let's start with the DJIA's technical outlook. This is the daily time frame chart, and here for past almost 3 weeks, the Dow Jones Industrial Average has been able to hold above 25,000 zone, and even in today's session, after staging a comeback from the levels close to 25,500, it is holding well, and right now it is trading with gains of around half a percentage point. And here we are likely to see a gap up open as the US equity session will start. These are actually the readings for Dow Jones Industrial Average futures, future derivative segment values. And if you consider this charting here, as you can notice, we have seen consolidation happening in the Dow Jones Industrial Average about 25,000 zone, and I feel this is kind of preparatory ground for the Dow Jones move higher, maybe towards eventually its immediate swing high, which is there around close to 28,000. And in this rally, we can expect the region around 27,000 to be crossed. So from that perspective, things are indeed looking promising for the Dow Jones Industrial Average. And if we are fortunate enough, if we get entries at the optimum levels, and if things go well, of course things can go wrong at any time. That's why I'm saying things, if things go well, then we are pretty much poised to make a good amount of gains here. And for that, we will see what are the levels which we can watch out for in today's session as well. So here the basic parameter for us in determining the trading's direction can be kept at this central pivot point which is there around 26,000 zone. So anything about 26,000 I would consider it on the buying side, and if things indeed fall below that, then it doesn't really mean that we should straight away go for a short sell. Maybe we can think about sitting on the sidelines and allowing it to consolidate further, and maybe after that we can go in for a fresh positioning. But as long as things are holding well above this central pivot point zone, I would recommend that it's more profitable to stay on the long side of the trade and see if we can indeed get some optimum opportunities here. The regression curve, after going on the downward side, it has again regained some ground as the price action has shifted to the upper band of this regression curve, and as a result of that we are seeing this upward bend on the regression curve. And now as things are consolidating closer to the central pivot point area, things are looking good. If we consider the SMAs as well, we have this confluence zone of this 50, 100 and 200 SMAs around 26,000 zones. So you can say we have multiple confirmatory factors which are converging closer to 26,000 zone. As I had explained to you, we also have the central pivot point of this one's pivot point series, and now we have this confluence zone of these all three SMAs. So taken together, we have indeed good amount of support coming into play around 26,000 zone, and that's why I said that anything about 26,000 is good for a buy. But then the question arises, when should we actually get involved? Then maybe after this rally of almost more than 3 percentage point, if we indeed get maybe a 1 percentage point move on the lower side, and if things go down towards the 26,000 zone, and if there we see consolidation happening, then that would be lot better rather than going in for a market open. But of course, one risk is that you never know, if things start to rally from this level itself, then we might miss out. But if we go in for a market open, then the risk is that our stop loss would be fairly wide, as I would say that we will need to keep a stop loss in the vicinity of 25,700, and that's kind of almost 2 percentage point move from the current level. So that doesn't really look that promising, or you can say compelling, and it will be indeed too much of a risk to take. So because of that, I would say that if we get some correction on the lower side, and of course due consolidation on the lower side as well, then maybe we, as and when we feel that there is some momentum on the buying side which is coming back, then we can think about getting involved for a fresh long trade with stop loss, as I said, around 25,700. And on the upper side, the target can be anywhere about 27,000 even. That zone is possible, or you can go with a conservative stop loss target ratio of 1 is to 2, and in that case, if you are going in for a stop loss of anywhere around 300 points, then of course naturally your target will be more than 600 points. Now moving on to the Euro USD's technical outlook. If you consider the Euro USD's primary underlying momentum, it is on the bullish side. But one thing to take note of is that we have already seen substantial rally, and for past almost 2 to 3 weeks, the Euro USD has been actually in a consolidation phase with volatility now reducing to some extent. And if you see this chart, this graph here, you can say that the Euro USD has been fairly range bound, with it getting some buying momentum close to 1.12, and on the upper side the upward momentum has been capped around 1.14. So we have to be careful while trading in the Euro USD, and it is indeed pretty difficult to make a clear cut sense of where it is headed, as we can expect this consolidation to play out for some more time, and in that case we will have to kind of adopt a scalping kind of trading strategy, where we are not betting on a one-sided move on for longer periods. Rather, we try to minimize our losses and play for a sharp stop loss and target price. So if we are going to do that, then of course here on the lower side we have to watch out for this central pivot point, and as you can see from this charting, on two occasions the euro USD went closer to that point, and on both the times it rebounded fairly sharply. So you can say that looking at the price action, this central pivot point has been acting as a near-term support for the Euro USD, and as is the traditional meaning of the pivot point series as well. Anything above this central pivot point is considered bullish. So we have here both these confirmation factor from the price action as well as from the pivot point series perspective that things are on the bullish side. So I would also say that we can indeed look for buy trades on the Euro USD as long as it is successfully holding above this central pivot point zone. And also here, as you can see, the regression curve is again, after flattening, is again bending on the upside, and now the price action has also shifted to the upper band of this curve. So from both this perspective, things are looking promising for the Euro USD as well. So here, coming to the hourly chart, we have this confluence of 50 and 100 SMA around 1.130, and as you can notice in today's trading session we saw this reversal happening exactly close to this confluence zone as well as this prior swing low which is there around the current levels, sorry, the 1.13 levels. Currently the price action has now again moved higher, so we can't really say current levels here. And I would say even in today's session, if we see that price action is able to hold above this immediate swing low zone, anything above 1.130, we can indeed think about going in for a fresh long position. And if we see price momentum here, then on the upper side, there is a possibility of Euro USD getting back closer to this 1.137 to 1.138 zone, and on the lower side, anything below this 200 SMA should be considered a warning sign, and in that scenario, we can give up on our idea of going for a long position in the Euro USD, and better to opt to stay on the sideline. So here for today's trading setup from the scalping perspective, I think here we can take a risk of around 20-25 pips on the lower side, and on the upper side we can target around 50 pips or even little more than that, and that will give us a target price just close to this immediate swing high zone. So that is a possibility here, but this is not a trade to go in with a full force of money. I would say that you should keep your position light, and also this target and the stop loss is also going to be on the sharper side. So watch out for the price action and then decide accordingly. And as I said, as long as it is respecting the immediate swing low as well as this confluence zone support, we have some possibility of Euro USD continuing to move on the higher side, and that is going to open up the window of possibility for us to go long in the Euro USD. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while utilizing the information provided. Have a fabulous day ahead. Thank you for joining in. See you tomorrow. Goodbye.